For our infrastructure investments, the key challenge is that certain expenditures can be very lumpy, with hefty upfront investments. Yet the benefits are enjoyed many years down the road. To address this challenge, we'll do two things. First, where possible, we'll save ahead in preparation for these lumpy investments. This will help reduce the burden in future years. In 2015, we set up the Changi Airport Development Fund to start saving for Changi T5. We now have $4 billion in the fund. This year, we'll set up a new rail infrastructure fund to save up for major rail lines ahead. We will start with an injection of $5 billion in FY 2018. This can be topped up in future years when our fiscal position allows. Second, we are looking at borrowing by statutory boards and government-owned companies which build infrastructure. This will help spread the costs of certain large investments over more years. These infrastructure projects, once completed, will generate economic returns over many years. The borrowing arrangements for these projects will hence help distribute the share of funding more equitably across generations. For example, the National Environment Agency will look at borrowing to finance the upcoming Integrated Waste Management Facility. LTA will look at borrowing for upcoming projects, such as the KL Singapore High Speed Rail and the JB Singapore Rapid Transit System Link. The Changi Airport Group 2 will look at borrowing for Changi T5. Besides spreading out the costs to better match when the benefits of the investments accrue, such long-term borrowings will also help to develop our bond market. To help lower the financing costs, the government will consider providing guarantees for some of these long-term borrowings for critical national infrastructures. A government guarantee will enhance the confidence of creditors. This is another way to use the strength of our reserves to back our infrastructure projects, without drawing directly on the reserves themselves. The reserves can then remain invested to generate returns. We're studying this carefully and discussing it with the President and the Council of Presidential Advisors. Through both saving ahead and borrowing, we expect to smooth out and be able to meet our major infrastructure needs.